The dollar index is currently at 89.73, and it is threatening to break below key 5-year support levels and potentially leave its 5-year trading range. In my opinion, the dollar is weak because there is more US Treasury supply than there is US Treasury demand because of the massive government budget deficits that are exploding and how foreigners like the Chinese government and other foreign governments are not buying the net amount of US Treasuries that they have over the last 20 years. So a weak dollar is normally bad for imports for Americans. Normally that means that the cost of imports is going to rise. And also a weak dollar, as you can see there on your screen, means that commodity prices can benefit. Now, not all commodity prices are going to go up the same amount because the commodity price will try to factor in, besides just a weak dollar, also the supply and demand fundamentals for each commodity. But recently, since the first week of September, we've had a lot of other commodities. So your industrial metals like copper, agriculture, and energy start to outperform gold, although gold has really started to rip now in the last 24 hours. Gold is now well above 1900. We'll see if it stays there. And gold stocks, which have been underperforming, especially the top quality gold stocks, so your Newmont Minings, your Agnico Eagles, your Sandstorm Golds, your Franco Nevadas, those companies are starting to finally see some life again today. But in general, a weak dollar is normally a tailwind for commodities and bad for imports, for the cost of imports, as those raise costs and put pressure into global supply chains with a weak dollar. And if you would like to take a look at the technical analysis I did with some charts, with both the 5-year chart, support levels there on the dollar index, and also the long-term chart over the last couple decades for the dollar index, I have those in a recent Patreon article. You could take a look behind the paywall there for only $5 a month. So bottom line is, with a weak dollar, the last time we had a big commodities rally across the board pretty much was in 2009 through 2011, when Ben Bernanke was doing the QE programs and writing his op-ed in 2010 for the Washington Post, talking about all this crazy asset purchases, and it was unconventional and you should just ignore it because it's not that big a deal and the wealth effect is going to help everyone, blah, blah, blah. But the dollar index back then was much weaker than it is right now. The dollar index actually in 2009 to 2011 got down into the low to mid 70s at one point before it started to rally. And there was an enormous amount of borrowing in dollar denominated debt when the dollar got weak, and we are starting to see a pickup again, shocker, of dollar denominated debt borrowing again. So if there is a rally in the strength of the dollar, as Brent Johnson has been predicting, in the next 6 months, we could see more and more problems as more and more foreign corporations and foreign governments see the weak dollar and start to take on even more dollar denominated debt. So the dollar tug of war is not over, but it is starting to become clearly on one side of the tug of war, and we'll see what happens if the dollar falls below even more key support levels in the not too distant future. And the main problem, again, in my opinion, why the dollar is so weak is because of these budget deficits, how they are well over 3 trillion. They may end up going to 4 trillion or more. That is just on balance sheet, off balance sheet, because Uncle Sam, or drunk Uncle Sam, as my buddy George Gammon says, does not have to use generally accepted accounting principles or GAAP. They do not have to count a bunch of off balance sheet spending items. So it is actually even worse with the size of the budget deficits. And we have both political parties in Congress talking about spending even more soon. Please consider becoming a patron over on my Patreon and chipping in $5 or more per month, so that way I can continue to do my research and make unique content and be able to make a living. Because with my YouTube channel, my Google AdWords revenues have collapsed almost to zero. My YouTube channel subscribers have stopped growing in the last 9 months. There's no growth there. And my live stream shows have been shut down, and YouTube tech support is giving me all types of excuses, claiming that they did not put a strike on my account, even though I can't edit the title for a live stream show. I cannot turn monetization back on. I cannot even turn live chat back on. That's how bad things are with the live stream show. I have almost 150, and hopefully soon it will be over 150 unique pieces of content behind the paywall on Patreon in terms of well-researched articles. Some of the articles have taken me many, many hours to produce for lots of different topics about gold miners, silver miners, precious metal royalty and streaming companies, a lot of articles about the oil industry and other commodity industries, also global macro related articles. There's also audio podcasts and a lot of stock charts and technical analysis there too. And while you are getting unique content, if I go over 1,200 patrons and I stay there, I will sign up for another live streaming service just for patrons. So I will make this pledge, I will make this promise. If I go over 1,200 patrons and I stay there, so if I drop below 1,200 patrons, the promise is not going to stay. I have to stay at 1,200 patrons and stay there. I will start to do live stream shows just for patrons behind the paywall there. Will require additional capital. I will have to sign up. I think it's $100 a month for another service there to integrate with Patreon, to sign up there and integrate. So that will be an additional added bonus for patrons if you want to take me up on that. But please chip in if you can, as YouTube is basically trying to make this impossible for me to grow my channel or to make a living from making content.